Over 130 countries, representing 98% of the world's economy, are racing to develop one thing: a central bank digital currency, or CBDC. Some experts believe this could end physical cash forever. Others say it could give governments more control over your money than ever before. So here's the question: will CBDCs make your life easier, or take away your financial freedom? In this video, we'll explore exactly what a CBDC is, the 5 different models that central banks are testing, and what it could mean for you, your wallet, and even your privacy. Stick with me till the end. You don't want to miss this. Studio microphone, let's keep things simple. A CBDC is basically digital cash. Instead of carrying paper notes or coins, you'd have official digital money stored in an app or digital wallet, issued by your country's central bank. Now, you might think, wait, don't we already use digital money with credit cards, PayPal, or mobile banking? That's true, but here's the key difference. CBDCs cut out the middlemen like Visa or commercial banks. The money comes directly from the government's central bank to you. Here's a relatable example. Imagine you're traveling abroad. Instead of exchanging dollars into euros or yen at the airport, often paying high fees, you could instantly convert your CBDC into local currency at official rates. Simple, fast, and way cheaper. By the end of this video, you'll have a clear, practical understanding of what CBDCs are, how they work, and whether they're good or bad for your financial future. Studio microphone, so why are CBDCs such a big deal? Let's take a step back. For centuries, governments controlled money through coins, paper notes, and banks. But in the last decade, cryptocurrencies like Bitcoin shook the system. People suddenly had a way to send and store money outside of government control. Central banks didn't like that. At the same time, cash usage has been falling. For example, in Sweden, less than 10% of transactions are made in cash today. In China, apps like WeChat Pay and Alipay already dominate the market. The IMF reports that over 65 countries are now in advanced testing phases of CBDCs. The question is no longer if CBDCs will exist. It's when and how. Think about it. Every major global power, from the US Federal Reserve to the European Central Bank to the People's Bank of China, is working on this. This isn't just a finance experiment. It's a geopolitical race for the future of money. CBDC model number 1. Retail CBDCs. Studio microphone. Retail CBDCs are designed for everyday use. Buying coffee, paying your bills, shopping online. This is the version most likely to affect you. You'd have a wallet app on your phone, directly tied to the central bank. Every payment, whether it's $1 or $1,000, would go through that system. In theory, it's faster, safer, and cheaper than debit cards. Case study. The Bahamas introduced the sand dollar, the world's first official CBDC. Why? Because many islands didn't have easy access to banks. With CBDCs, even remote residents can store and send money instantly. Analogy: think of it like WhatsApp, but instead of sending messages, you're sending money directly, instantly, and without fees. But here's the flip side. If the central bank sees every transaction, does that mean they know when you bought coffee, paid rent, or tipped your barber? That's where privacy concerns start creeping in. CBDC model number 2. Wholesale CBDCs. Studio microphone. Wholesale CBDCs aren't for everyday people. They're for banks and big financial institutions. Right now, banks move trillions of dollars daily, but the system is slow, costly, and sometimes risky. Wholesale CBDCs aim to solve that. Payments between banks could settle in seconds, not days. International transfers could become as easy as sending an email. Fraud and errors could drop dramatically. Real-world example. The Bank for International Settlements worked with Singapore, Hong Kong, and Thailand on a wholesale CBDC project that successfully cut cross-border transaction times from several days to just a few seconds. Rhetorical question. So why should you care if banks use CBDCs? Because when banks save money and time, those savings could trickle down to you in the form of cheaper international payments, lower fees, and even faster wire transfers. CBDC models number 3, number 4, and number 5 studio microphone. Now let's quickly run through 3 other CBDC models. Hybrid CBDCs, a mix of central bank and private banks. The central bank issues money, but private banks handle distribution like today's system but digital. Indirect CBDCs, the central bank gives CBDCs to banks, and banks give them to people, keeping banks in charge. Token-based CBDCs works more like Bitcoin, where ownership is based on digital tokens, not bank accounts. Pros: could expand financial access to people without bank accounts. Transactions could be faster, cheaper, and more secure. Potential to modernize outdated banking systems. Cons: privacy risks. Governments might see every single purchase. Control risks. Governments could block or limit certain types of spending. Security risks. A CBDC system could become a target for hackers. Here's an analogy. Imagine CBDCs as a car. Yes, it's faster, shinier, and safer than your old car. But if the driver, the government, decides where you can and can't go, do you really own the ride? Studio microphone. So what does the future look like? By 2030, experts predict that most major economies will have rolled out some form of CBDC. Some countries, like China, are already years ahead, with the digital yuan being tested in big cities. Others, like the US and UK, are still cautious, mainly because of privacy debates. Opportunities: faster cross-border trade, financial inclusion for the 1.4 billion people worldwide who don't have bank accounts, reduced fraud and corruption risks. Governments could track and monitor every transaction, possible limits on what you can buy, for example, restrictions on alcohol, gambling, or even travel. The danger of programmable money, where CBDCs expire or can only be spent in certain ways. What if scenario? Imagine your government issues a CBDC and decides to boost the economy by giving every citizen $200, but here's the catch. The money expires in 30 days if you don't spend it. That's the kind of power CBDCs could give governments. Studio microphone. Let's wrap up. CBDCs are government-backed digital currencies. There are 5 main models. From retail to wholesale to token-based, they promise faster, cheaper, more inclusive money, but raise serious questions about privacy and control. Backhand index pointing right. The big question: are CBDCs the future of money, or the end of financial freedom as we know it? That's something we'll all find out in the coming years. If you found this video useful, hit like, subscribe, and tell me in the comments. Would you use your country's CBDC if it launched tomorrow? Or would you stick with cash and crypto? Thanks for watching, and I'll see you in the next one.